welcome to the show. Let me start by saying that I'm not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. It is January 28th, and we'll be talking about metamaterials, the metamaterials Torchlight Preferred Shares, Oilco, and what a spinout might look like. This is an update to a previous video because situations have changed, and this is the situation is fluid, and I'm providing an update as to the fluidity. Okay. That said, let's look at the stock price of metamaterials. It ended the week at $1.49 with an intraday low, all the way down to $1.38. It's been behaving very volatilely, and I believe the reason for that is that metamaterials is a constituent of ETFs that are being shorted heavily, and the goal of the shorts is not so much metamaterials. It's really collateral damage. The goal of the shorts is to attack GameStop, stock symbol GME, and metamaterials just happens to be in the same ETF as GameStop. So I call that collateral damage. And if we look at the metamaterials Torchlight Preferred Shares, they've been very stable compared to metamaterials. They've traded between $1 and $2 throughout most of their trading life. Right, most of the time you could buy or sell the shares. It's been between $1 and $2 basically. It ended the week at $1.26. So if you're new, you might be wondering what I'm talking about. What's metamaterials? What are these Torchlight Preferred Shares? What's going on? Okay. So metamaterials is a company. It's got some cash. It's got a bunch of IP. It's got a bunch of stuff. But it previously merged with a company called Torchlight. And as a result, they got a bunch of oil and gas assets. And they plan to sell off those oil and gas assets and give the proceeds of the sales to metamaterials Torchlight Preferred Shares, to the shareholders of metamaterials Torchlight Preferred Shares. The stock symbol of that is MMTLP. So they'll get dividends as a result of the sale, right? So in addition to the oil and gas assets, they also have some people that they picked up from Torchlight, which are their oil and gas team, right? So they take care of the oil and gas assets, maintain them, etc., right? Make sure everything's hunky-dory with them, right? Okay. So on January 14th, metamaterials provided an update about their Series A preferred stock, Dividend. This is the other name for the MMTLP. This is the other name for the metamaterials Torchlight Preferred Shares, also called MMTLP. As far as metamaterials was concerned, they never created MMTLP. The shares were never meant to be sold or traded. They were meant to be given to Torchlight shareholders, okay? And they are the Series A preferred stock. Somebody else came out and actually made sure that stock was tradable, probably because they wanted to get a hold of those shares. And so they started trading them and making sure that they could buy them. Anyway, that's just speculation on my part, but in either case, metamaterials had nothing to do with making sure that the Torchlight Preferred Shares were tradable. But they released an update on January 14th, and along the way, that update described a new structure around the whole, the whole kit and caboodle. Okay, so we have metamaterials, and we have a wholly owned subsidiary called Oilco, which owns the oil and gas assets now. They've got a management team to manage the oil and gas assets. They've got some working capital as a result of taking a loan. Greg McCabe has co-signed the loan. He's the loan guarantor. And the intention is that when they sell Oilco or parts of Oilco, that the metamaterials Torchlight Preferred shareholders will get a dividend as a result of that sale, right? So that's the way that works out. So along the way, we see that Roller Pigeons has made 2 videos describing what she thinks might happen. Check out her videos. It's quite instructive. She talks about why things are going in the manner that they're going, who might be buying them, etc. It's really good videos. Links will be provided. Check out both of them. And she'll talk about the reason for the particular path that they're taking. Essentially, essentially what happens is that George Pelecaris has stated over and over again that he wants to capture the maximum value for the metamaterials Torchlight preferred shareholders. Capture maximum value. Basically, he means that he wants to get as high a price as possible, and he wants to avoid paying any taxes on that and transfer the assets to the shareholders. Okay, that's the objective there, right? Capture maximum value, and so that's the reason behind all this. And Roller Pigeons goes into it. She talks about the IRS rule that's precisely being targeted, which is, I believe, Rule 355. Check out her video. It'll explain everything. In any case, I tend to think in pictures and diagrams, so I like to make pictures and diagrams. And this is what I came up with. So we've got a possible scenario where you got metamaterials on the left-hand side with the oil co wholly owned subsidiary, and we've got this other entity. I'll just call it NextBridge. Okay. They've got some cash that they obtained from venture capitalists, let's just say. And the reason I'm calling them NextBridge is that a while back there was a website that came online. It was up for about a day. It talked about the website was NextBridge. It talked about the oil and gas assets that metamaterials had. It talked about the Oro Grande Basin. That's exactly where the oil and gas assets were. They had photos of their drilling operations, which looked very similar to the drilling operations that Torchlight and metamaterials was doing. It looked to be nearly the same. It looked to be the same, piece of land. So there was a lot of speculation that NextBridge is somehow involved in this, whether they're going to be the next buyers or what. Anyway, let's just call the next buyers NextBridge, and let's just say they got a bunch of cash from VCs, and they're using that cash to give it to metamaterials, and in exchange, they hope to get some oil co. And if they do this right, it'll be a tax-free distribution. They'll get 49%. Okay. And apparently, you can't do a tax-free distribution with more than 49%. So that's where the 49% comes from. So because because metamaterials got the cash, they'll give the cash to the MMTLP shareholders, and MMTLP will wind up ceasing to exist. Instead, the MMTLP shareholders will have gotten the rest of the 51% of OilCo in a tax-free distribution. So again, the key concept here is tax-free distribution, right? Or the other word is a non-taxable event. In a non-taxable event, all the assets will be transferred to the appropriate parties. Okay, that's what they're trying to trigger, is the non-taxable event. So after all of that happens, you'll wind up having the previous MMTLP shareholders who will have a bunch of cash from the dividend and 51% of a company called OilCo. You'll have NextBridge, which will have the other 49% of the company called OilCo, and OilCo will exist itself as a separate entity, right? And you'll have metamaterials, which will not have any OilCo at all. Right? They will have divested themselves from oil and gas assets, and they will have nothing to do with oil. So everyone is happy. Everyone will be able to move forward in their own ways. Okay. So I was wondering, now that we think this is what might happen, how much could the dividend pay out? So if we look, I made an earlier video about how much a dividend could be based upon the price of oil, and that video was running under the impression that you would sell all of the assets, right? Not that you would be doing a partial spin-off and getting some cash as a result of that, and then getting some other shares, right? So, and at that time also the price of oil was around $75 a barrel or so, and we know that the price of oil has changed. It's currently around $86 a barrel, so it's good to do an update on this. I won't go over the exact calculations. The calculations are in the previous video that I described, but we'll do an update with plugging in some new numbers, being the $85 for the price of oil. And that will have a ripple through effect on the spreadsheet. And if we look, we're looking at a possible dividend if we sold everything of $47.23. And that means with 164 million shares, that's about a valuation of about $7.79 billion or so, let's say. $7.79 billion, right? But we're only going to get about 49% because, hey, we're only selling 49%, okay? So as a result, it'll probably wind up dropping down to $23.14. And that cash payout will be, the total amount of cash that MetaMaterials will be receiving that will be distributed to shareholders will be about $3.8 billion. So then the next question that comes up is, suppose people reinvested that dividend back into MetaMaterials, back into MMAT. George Palikaris, the CEO of MetaMaterials, has indicated that, he would be very pleased if that happened. And a lot of people think, oh, yeah, seems reasonable to do. Yeah, why not? Well, I made a video about that as well. Links will be provided. But essentially, if we do an update with the fact that we now get some dividend and some oil co, let's see what that looks like. So we'll take that same spreadsheet. And let's see. So we'll take that same spreadsheet that we went through earlier, which resulted in about $3.8 billion. But as we see, the dividend calculation here is based on $75 per barrel of oil. When we update that to $85, it becomes $3.8 billion. We take that $3.8 billion that will be paid out, plug it into the amount that's reinvested. If people only reinvest 25% of that, right? If only 25% of that dividend gets reinvested, that's about $900 million that's going to be reinvested into MetaMaterials. $900 million. $950 million, actually. So it's even more, okay? And at a price of $1.49 per share, that means that you could purchase up to 640 million shares. But there's a problem with that, because there's only 188 million shares available to buy. There were 281 million shares that were actually issued, of which insiders own about 50 million and institutions own 41 million. That leaves 188 million. That means that people would need to buy 450 million shares that don't exist. Okay? So people would wind up, buying more shares than exist. Well, what happens if instead of 25% we go down to 12.5%, right? Well, if only 12.5% get reinvested, we're still short something like 131 million shares at $1.49, right? The 12.5% implies that you'd be getting 320 million shares purchased, and there's only 188 million. Again, there's not enough shares. Suppose only 8% gets reinvested. Well, at that point, you're short about 16 million shares. You're still short shares. Yeah, it's just there's not enough shares. So it can't happen, right? It's not possible. But again, the other thing is we forgot about the other half of the dividend. We only talked about the first half, the 49% of the dividend, and getting the $3.8 billion distribution as a result of that. But there's an additional 41% left, and that can be sold to NextBridge next year. But next year, we're projecting the price of oil to be around $120 a barrel, not $85. And the reason for that is Bank of America released a report that said they think that oil will get to $125 per barrel in 2022. JP Morgan released a report that said they think that it'll get to 125 in 2022, and in 2023, they think it'll get to $150 a barrel. So if we want to capture the maximum value for shareholders of MMTLP, and you sell those shares the following year, you sell the additional. Let's say you sell an additional 49% for tax-free distribution there again as well, right? Then at that point, you're going to be raising about $6 billion, which is going to go back to the shareholders. That's going to be something in the range of $36 per share, okay, of MMTLP equivalent. That's pretty good across 2 years. Anyway, there's not enough shares at the first dividend, if it comes out, to actually pay for that at $1.49. Definitely, there's not going to be enough shares with the second dividend. If people reinvested, okay. So the question comes up: there's not enough shares. Wouldn't all that? But none of that makes sense, because if you're going to be buying up shares, that's going to drive up prices, right? I mean, no, that's what you would think, right? Well, we forgot about Mr. Market Maker, right? Mr. Market Maker is there to facilitate trades. He gets between buyers and sellers, and he actually adds liquidity to markets. What does that mean? That means he's allowed to naked short to add liquidity. Okay, he's got a superpower given to him by the SEC. Naked short all you want. Make the shares available so the buyers and sellers can be happy. Okay, so Mr. Market Maker is allowed to naked short, and as a result, people may buy greater than 100% of the shares issued because of the naked shorts that are there, right? Now, a lot of people believe that there's already greater than 100% of MMT of metamaterial shares that are already naked shorted. But one day those shorts have to come home to roost, and they have to be resolved. And that may be all very well and good, but how would that affect the individual investor, right? How would that affect me? How would that affect, if someone were to do that, how would that affect them? So if, let's just say, Mr. Average Joe or so, he wanted to get 1,000 shares of MMTLP. Currently it's $1.25. He might be spending something like $1,250. It's possible, right? And if he does that, then he's looking at $23.14 per share dividend. That means he could be getting something like $23,000 out of that expense of $1,250. Okay. Now let's say he lives in a high tax state like California. I live in California. So he gets a dividend, but it falls under qualified dividends. So he winds up paying, the state income tax and the Obamacare tax and all that, and the qualified dividend tax and whatnot. You might be paying something like 37.1%, which means you're paying about $8,500 in taxes, which means you're left with about $14,500 after taxes, in cash at that point, right, from your dividend. Not bad for a $1,250 investment. You got $14,500. Now you're going to redeploy that. Let's say you redeploy all of that back into metamaterials, right? $14,500. You're reinvesting the whole thing back. Let's say you're buying it back at $1.45, say. Then you got about 10,000 shares that you've just purchased. Okay. You now have 10,000 shares of metamaterials, and you know that there's not enough metamaterial shares going, for everybody. So the price is going to go up. Let's say that you happen to get them because of Mr. Market Maker, but let's say those shorts eventually get resolved. What happens then? Well, the price could go up significantly, right? We know that GameStop went up to $481 from about $4 when all those shorts came home to roost. In actuality, the shorts didn't even come home to roost. They just had a gamma squeeze. They didn't even have a short squeeze. Okay? So, with the gamma squeeze, they went up to $481. Let's just say metamaterials only goes to $100. Nowhere near as high as GameStop went, right? That means you got you got 10,000 shares, $100 a share. You got about $1 million. Okay? Almost all of that's profit. $989,000 was profit. Okay? And because of that, you're probably going to be paying the maximum tax possible, which means you're going to be paying short-term capital gains tax, which is basically regular income tax. Put that into a high tax state like California, you might be paying as high as 54.1% taxes total. Okay, that means you're paying a little over $500,000 in taxes, leaving you with $454,000, all from a $1,250 expense. It's not too bad, okay? That's if it's short term. Let's say it's long term. Okay, let's say you're able to hold it for over a year, and then you sell it after a year of holding it, right? And the price went up to $100, let's just say. At that point, you're only paying about, in a high tax state like California, you're probably paying about 37.1% total taxes, which means you're paying about $370,000 in taxes, which means you're taking home $622,000. That's not bad. Not bad for a $1,250 investment. Anyway, let me just reiterate, this is not financial advice. I'm not a financial advisor. I'm not recommending you do this. I'm just saying, what if? Okay? Anyway, this information is intended for entertainment and educational purposes only. And I'm just reiterating that. Just FYI. So if you're interested and you want to learn more, there's a bunch of online communities. And the best one to go to is RMMAT. You got 18,700 people talking about this every single day. They'll keep you updated as to what's going on. Just check out that community. It's pretty cool. If you like Twitter, you can just look at hashtag MMTLP or hashtag MMAT on Twitter, and you'll get all the info on metamaterials and metamaterials Torchlight preferred shares. Okay, those are two good sources of information. Right, two good communities that are actively up to date on what's going on. So that's what the spinout might look like. Let me end by saying I'm not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. And good night. Thanks for watching this video. Bye.